Hello, welcome to video number 2. This is taxes and money management. So after watching video number 1, you know that we're working on running this like a business. This is a key point to running your Mary Kay business like a business. Okay, so taxes and money management. The first thing we're going to talk about is write-offs. Who doesn't like write-offs and ways that you can get extra money back on your taxes? I love that. I love getting a huge refund check at the end of the year because of my Mary Kay business. So let me tell you some of the great things that you get to write off. So right now you're going to want a pen and paper and you're going to want to be jotting these down, and you can create a spreadsheet and track all of this stuff each month. Okay? You can write off all of your travel. So if you're flying somewhere for an event, you can write off if you paid a bus ticket, whatever that may be, any type of traveling that you're doing Mary Kay related. You can write off all of your meals when you're doing something Mary Kay related. So when you're at seminar or when you're at career conference, all of that stuff you get to save the receipts and write off. If you are on your way to studio and you grab food, and you give your business card out to the girl at the drive-thru, you get to save your receipt for that. That would go in meals. If you're out to dinner and you leave your business card and a sample for your waitress, or you have your waitress fill out a skincare survey, that whole meal is tax deductible. So it's pretty awesome, all the different things you can put in meals. The next thing is the PCP or Preferred Customer Program and your website. So it's going to be one link. That is a write-off as well. Your cell phone is now a write-off because you use that to run your business. That's how you're making your phone calls. That's people are calling you for orders, texting you for orders. So your cell phone bill is a tax write-off. Any skincare class supplies, any washcloths, little bowls if you're using those, any pens, any tickets, anything that you buy for your business, that is a supply. That can go under supplies. Rent fees or event fees or studio fees. So you know that your first meeting at studio is always free. After that, it's $5 for every event that you attend. That's just to keep the lights on. That's to keep the studio running, to pay the rent. So you get to write that off. So you're going to want to track that on a sales ticket throughout the year so that you can track that each month, how many meetings you were at, whether you were a key holder or not, what that cost was, because you get to write that off. If you're growing in leadership and you're deciding to give some prizes out to your own team members, those prizes are all tax deductible. So whether they're Kate Spade or whether they're earrings or notebooks, all prizes are tax deductible. All of your shipping is tax deductible. So you're going to save your packing slips from every order, and there's something called Section 2, and then there's shipping. So you're going to highlight those, save them all, and then you can total that all up. If you go to the post office and you ship product to a customer with your own little envelope, those envelopes would go in supplies, and the shipping goes under shipping. So that cost would go under shipping. Your pro pay is tax deductible, and all the fees that come out of every transaction. So I don't know the exact percentage, but every little fee that comes out of there, you can pull up on pro pay a report that's going to tell you all the fees throughout a certain month that were taken out of the profit that you processed. You're going to write those off so you can get those back at the end of the year. So that's a tax deduction. Any registration, so registration for career conference, for seminar, any of those things that you register for, those are a tax deduction. Any events that you go to that are not necessarily a studio event, but like if we go to an outside event that a sales director is holding and you pay a fee to go, that is a tax deduction. Donations. So if you have someone ask you for a donation or you're donating product to some organization, that is all tax deductible. So you just track that on a sales ticket, and again, that's tax deductible. Any products that you either use for your personal use, demo, or giveaway, those are all tax deductions. Now, the government wants you to specify which one. So if it's personal use, all the product that you use on yourself, you get to write off. Just keep a special sales ticket for all of your personal write-offs. Then we have all of your demos. So everything that you've opened up from your inventory that you're using to demo on people, those are all tax deductions. Anything new that you buy to demo, tax deduction. So you're going to want to track that on a sales ticket and write it down. Also, anything that you give away at a skincare class, anything that you give away a free product to somebody for holding a class for you, whatever the case may be, all of that is tax deductible. It's a giveaway. The other thing we track is something called tax lost. So on all of those personal demos and giveaways, you lose the tax money that you paid the company, right? Well, we're going to write off that tax loss. So you're going to total up that tax lost and you're going to get that back. We do this all on retail because if the personal use stuff that you were using, if you were going to buy it outright from a consultant, it's retail price that we're writing off. Everything that your demo is retail price, giveaway is retail price, because you're losing that profit. You don't do wholesale, it's always retail, okay, that you write off. Okay, we talked a little bit in the first video about opening a separate checking account. So we don't really need to go over that. The second thing we talked about was Financial Friday and paying yourself once a week, having that one business day that you plan your week and you pay yourself. Okay, so what does Financial Friday look like? We do something called the 60-40 split. This is totally up to you, but this is what I recommend for a successful business. So first of all, let's say you sell $100. 60-40. $60 goes back into your business, $40 is your profit. Let me explain that. So if you sell $100, $50 of that has to go back into your business to reorder the product that you just sold or to order the product that you just sold, right? So 50%. So in $100, that's $50. So then you have $50 in profit. I recommend saving 10% of everything you've sold for business supplies, for shipping, for Section 2 items on InTouch, for business expenses. So that way you don't have to pull it out of your own checking. It's just sitting in this other checking as like a buffer for you. Okay, so that 10% you're saving. Okay, so out of $100, that's $10, right? So $60 would stay in that checking account for you to order new product and have that 10% buffer. And then 40% profit is what you can take to pay yourself. Okay. Now, if you've put your inventory on a financing option or a credit card, you want to pay that off with your profits first. If you have to pay a bill, then take that profit. Once your inventory is paid for, then you just start taking all of your profit and all of your inventory is on your shelf. Okay, so hopefully that makes sense. And if you have questions, I can sit down with you and talk to you about that a little more. The other thing you want to keep in mind is keep all of your receipts. That's how you're going to track everything. That's how you're going to write everything off. Just keep all of your receipts, keep them in a little bin at the end of the month, total them up, and know how much you're putting into your write-offs from those receipts. Packing slips from the company, we talked about that. You're saving all of those and you're highlighting the Section 2 and the shipping so that you know what you're writing off from that. The other thing that you'll want to do is organize your profile cards and your sales tickets. So this is a little bit of business basics too. They kind of cross over. All of your profile cards you'll want to organize alphabetically, and then you'll want to keep the sales tickets with each customer. But once you put them into the computer, it's all going to be on your computer under InTouch for My Customers. So you put the profile card in there, then you put their orders in there, you save it all, it's on the computer, and then just keep those paper copies just in case. I've never really needed to look at mine unless there were referrals on the back. Then, sometimes I go back and look at them. But other than that, you're not really going to need to look at that too much. So, then inputting data on InTouch for your customers. That's huge. Like I said, you're putting in everything from that customer profile. You're saving if she puts somebody down to contact for Christmas. So that's one thing I do with my paper tickets is right around Christmas time, I'll thumb through them all and say, okay, she's got someone to contact for presents. She's got someone. And then you can contact that relationship spot of people to get some more sales around the holidays. Okay, so that is a little bit about taxes and money management. And obviously, if you have questions, Vox me, reach out to me. I'm here for you. That's my job. So I'm super excited to kind of see if you have any questions or if you need anything from me. So, all right, we'll see you on the next video.